Welcome back to Fast Money. Shares of Beyond Meat hitting after-hour session lows on the back of its earnings and the announcement of a secondary offering. The alternative meat maker had been on an incredible tear since its May IPO, up nearly 800%. Our next guest is the first Wall Street analyst to put a buy rating on the stock. She's since changed her tune, downgrading Beyond Meat to a neutral back in mid-June. We should note that the stock has climbed more than 75% since that call. Let's bring in Alexia Howard, the senior research analyst at Bernstein. Alexia, great to speak with you.
Great to speak with you, too.
What's your take on the quarter and more specifically the secondary offering?
So with the quarter, it came through pretty strongly, better than consensus estimates. The sales were strong. The profits were good. The guidance for the full year, they raised the sales estimate from $210 million up to $240 million, which is nice, but, not exactly a massive move there. But bear in mind that doesn't include some of their wins that they've announced recently, including things like the Tim Hortons burgers, things like the Dunkin' Donuts relationship that's just getting off the ground. So there's possibility for further good news as we roll through the rest of the year. With the secondary offering, I think it's interesting that we are going to get a more sizable float, although it's still a fairly small proportion of the overall company's value that's going to be publicly traded. They're clearly going to be using a lot of that to ramp up their capacity for next year. This is clearly a business where the problem is a high-quality problem of lots of demand from lots of different avenues. So they're obviously doing that so that they can get out ahead of the rest of the competition.
I presume I didn't get a chance to read that June downgrade, Alexia, but part of that would have been the run in the stock to that date and valuation concerns. At what level does the stock have to get? I mean, now that we've seen another quarter of earnings and you said that they're largely pretty good, what level the stock would have to reach in order for you to get more bullish? We've definitely seen the valuation becoming more and more stretched over time. So that really is the constraint here. I think what we're looking at the moment, we've had a string of really good news for the stock. If we did see a little bit of weakness at some point, I think that might be an opportunity to get back in, but we'll have to see how it plays out. But it's definitely been a very volatile stock over the last few months, as you rightly pointed out.
Karen, let me ask you something. In terms of the competitive threats, which we talk a lot about here, when do you think we might start to see some real competition beside Impossible Burger, Tyson or somebody like that, really trying to come in aggressively?
So I think they've been up against the Impossible Burger fairly traditionally for some time now, particularly obviously exclusively in the restaurant sector. We've been staking their claims with different restaurant chains around the country. We do now have Tyson having announced some more products that they're bringing out on the plant-based front later this year, or they've already started to launch them in select markets. Nestle has also talked about bringing one of their burgers over. They've already trialed it or started trialing some of those in Europe, but they're planning a U.S. launch again in the fall. And even companies like ConAgra with their Gardein brand are trying to get into the game. So I think what we as analysts are going to be doing is keeping a close eye on what's happening with the sales data that we're getting from the grocery channels, particularly, really trying to see how are the distribution, how's the shelf space developing as all of these different brands bring different products to the table.
All right, Alexia, we're going to leave it there. Thanks so much for phoning in. We appreciate your analysis. Alexia Howard of Bernstein. Let's trade it here, Tim.
Well, good for her for really being both ways on this trade. And she was early. She basically said, despite what seemed like a difficult valuation out of the gates, I commend her. I think the competitive landscape is something that, while maybe it's not feeding into the numbers we heard today, in fact, it's absolutely the opposite, and that demand continues to grow for this name. I don't see where you can begin to justify this. Now, I don't see any competitive moat that keeps this company away from all the competitors.
Should we on this stock, I'll ask you this, BK, because you've been a Tesla fan in the past.
I have been.
Should we, for this stock, suspend some of the basic fundamental valuation metrics? And I hate to say those things, and I hate to say suspend that because, ultimately you should.
What we do.
But is this one of those stocks that will always trade on sentiment and momentum to some degree?
I don't think so, actually. I think there is some fundamental basis to this. When you're talking about a stock like Tesla, you're talking about really buying into Elon Musk's bigger vision than just a car. Is there a bigger vision here? Yeah, maybe if you consider sausage bigger vision than hamburgers.
Oh, you tasted it?
I haven't tasted
just
that.
joking.
No. But I do love breakfast sausage. But anyways, that's a total aside. Point is, I'm not sure that this is a company that should or could get that pass from Wall Street saying, the earnings don't matter ultimately. I think in the short term, the issue they're going to have is this capacity issue. How much do they need to spend? Do they need to build another factory? Do they need to expand beyond their Missouri roots? I think that's something investors are going to start asking.